What do most people get wrong with their personal finances?
Oh, we're coming in hot. Okay. So, the thing that most people get wrong from working with clients over the past 10 years is not having a clear goal. Many folks just have nothing that they're going after outside of better, right? I want to
Mm.
manage my money better or budget better, but we don't have a clear definition of what that looks like. And so, until you have a clear target of what better is, and how that's going to allow you to enjoy life better,
Mm.
it's going to be incredibly challenging to manage your money any different than you've done it in the past.
And and how do we begin to find those goals? What do we look for?
Yeah, so I think the easiest thing for many of us to do is kind of sit down and identify what do we want life to look like. I like to teach my clients that our finances are an extension of what we want to create, and we use that money to design the life we want to live. And so it's less about how much you make, which you do need to have income, right? But it's more about how am I going to use my money and my assets in order to design this lifestyle that allows me to really enjoy life and not go to work for the sake of I have to earn money, right? And so
Mm.
when we're thinking about, what these goals are, we should be thinking about, what makes us enjoy the time we have away from working. So if it is, taking trips with family or just creating small memories or whatever those things might be. Many of us, we appreciate quality and healthy food or exercising and whatever those things are, right? Identify the things that are in alignment with your values, what really makes life worth living, and then create goals around that. That is what's
Mm.
going to allow you to manage your money a little bit better so that way you can start to reach some of those goals.
Mm. I suppose you're sort of working in reverse in a way, because a lot of people, like you say, would say, "I need more money so I can do this or that," but they don't really know why they need the money. So if you start to look at what you actually want and then take a step back and work out how much you will need to do that, I suppose it's that sort of thing, right?
Yeah, exactly, right? Um and sometimes when we think we don't have money for stuff, what we realize after we kind of peel back our finances and identify that, oh, I do have the money. I was just allocating it other places where those things really aren't important to me. But because I wasn't clear on what was important, I didn't pay attention to the money that was kind of dripping out of the bottom of the bucket.
And what about people who might have a lot of debt? So student debt's a massive one people have, and they're paying that off all the time. Loads of various other types of debt. So people might want to sort of get on top of their finances, but they might feel that they can't because of that debt. It's just a lingering thing. They always feel like that debt is never going down. So how can they start to overcome that?
Yeah, so debt is a huge thing that we address with clients. We have to identify like what is the root cause of the debt. So for some of our clients, it is multiple advanced degrees. And so when you have student loans in the 200, $300,000, like that can be crippling because, the student loan payment could be a mortgage, the same as the
Mm.
mortgage, right? But beyond that, addressing any overspending that might exist where you might be adding on now credit card debt, and then are you financing a car, and so taking a look at all of the debt that you have and identifying, how does this particular debt improve my quality of life, and if it doesn't, how can I fast track the repayment options that are available to me. So when we talk about student loan debt, there's a lots of different types of student loans, and so here in the US, there are all kinds of repayment programs that are available, especially if you're in the public sector. But sometimes it's just a matter of checking to see, like, is there a forgiveness option that I might qualify for, which might be a little bit of research on your part to see what options exist. So For anybody who's listening to this, one thing I would encourage you to do is to take a moment to sit down and write down every debt that you have. So list every single creditor, what the balance is, if there's interest that is accruing on that, and then identify what the minimum payment is. And when you add up all those minimum payments, that's going to tell you how much every single month you're spending in debt repayment. And when you see that number, if it is a significant portion of the monthly income that's coming in, now you know you either need to cut expenses or identify a way to make more money so that way you can get the debt paid off. Um, One of the things we have clients do is if there is a issue with overspending where they're accruing additional credit card debt, we stop all credit card usage, because sometimes it's so easy to just swipe the plastic, right? It's like, oh, I got this Amex, I can just go crazy. But you're borrowing money and oftentimes at double digit interest. So
Mm,
we just want to be mindful of every dollar that we spend. And this doesn't mean that you have to turn into this like frugal Scrooge person, right? But you do want to be intentional, because if you kind of begin to course correct these things now when you are, you know, under 40, it is easier to recover than trying to figure out what to do in your later years. So that would be my biggest thing is it can be challenging to tackle this journey when you have debt, but the best way to go forward is to just attack it head on, kind of remove the emotions and any guilt you might feel, because sometimes we feel like, oh, we should have known better. And
mm,
that might be true, but also we can't change the past. We can only create a plan to forge forward. So I would just say, if you know you have debt, take a moment to sit down and write all of those pieces of information down and put together a strategy to move forward.
mm. And things like credit cards or car finance, are they good options for some people and maybe not good options for other people, or can they be used well by everyone?
Yeah, so that's a really great question. I always approach everything with like a it depends lens, right? For people who are able to pay off credit cards in full, credit cards are a great way to get cash back rewards and sometimes just different perks, points that come with using credit cards. But it has to be done responsibly, because otherwise we're accumulating these points, but we're accumulating debt that is more expensive than the reward connected to the credit card. So, for folks who are really good at paying off their credit cards every single month and not incurring any interest, I love credit cards for you. But for others, it's not wise because you're not really utilizing credit cards in the best way possible for your finances. Now, as far as financing vehicles, it all depends on the interest rate. Um, and also it too depends on how you're using the vehicle. So sometimes I'm working with business clients and it might make sense to lease an automobile through your business, whereas for somebody who doesn't have a business and can't use some of those tax incentives that are available in the US, it may not make sense, right? So it all goes back to, what at the core of this conversation, how are you managing your money? And if you're doing it wisely, can we leverage debt as an option to deploy financial resources somewhere else? So the short answer is it depends, right? But the longer answer is, for most people, if you're not disciplined, you want to stay away from debt until you can balance a budget and work it well. We're not overspending.
I've read and sort of heard about this idea of if you've got multiple debts, paying off the smaller debt first to sort of get that snowball effect rolling. Is that still the sort of go-to advice?
Yeah, so that is the probably the most popular strategy because it takes advantage of this um dopamine boost you get when you accomplish something, right? So if I have a small balance or maybe a department store card that's under $1,000 and I can get that paid off quickly, now I feel good about accomplishing something and I can carry that momentum to the next debt. Now, mathematically, it makes more sense to pay off your higher interest debts because you'll save on the interest that you are not paying because you're paying off the most expensive debt first. But for most people, those higher interest debts are often the ones that are higher balances too. And so it could take a little bit longer if you have a $10,000 or $20,000 debt with a higher interest rate where you don't get that immediate boost from accomplishing paying it off. So it depends on what is a good motivator for you. And if you are somebody who can stick with a strategy before seeing the reward from it, then the avalanche method is what I'm talking about, where you pay off your higher interest debts first, might make sense. But if you're somebody who needs maybe not instant gratification, but quicker gratification, the
Yeah.
snowball method is going to be one that works well for you.
Okay. Yeah. And in terms of, so we've spoken about sort of some debt stuff and people budgeting, and how would you suggest that people set up a budget that actually works, something that's not too complicated? I think quite often we get overwhelmed with it and we try and break down every little thing.
Mm.
How do we make that simpler?
Yeah, that's a great question. So, there are a few budget strategies that exist. One of the most simple strategies that I love is the 50/30/20 budget, where essentially 50% of your expenses go towards things that you need for living expenses, right? So this would be where your groceries and rent and the things that are like, hey, I need this to survive, those things kind of go in that bucket. Then
Mm.
20% is going to go toward saving or extra debt payments. And then 30% is going to go to things that you kind of want to do, right? So, like, you may want to go out to restaurants and want to have different experiences. And so, depending on where you live and what the cost of living looks like, you can kind of adjust those categories, the percentages of the categories, so that way it fits. So now, you know, a lot of us are in areas where housing is astronomical. And so, 50% towards the things I need may not be enough. And so you might need to bump that up to maybe, 60 or 65% and then kind of
Mm.
reduce the wants category, right? Which we don't get excited about that, but
Yeah.
that's kind of the reality of our situation. And so let's say, for example, how can we do some quick math? What's a realistic number that people are making? Maybe 5 grand. Are people making 5 grand take home every day? That's what,
In
60,000.
in
Yeah.
dollars, yeah,
Yeah,
maybe.
I think
Yeah.
that's a good number, right? So let's say you're bringing home $5,000, and if we need to allocate 20% of that to going towards saving and paying off debt, that's gonna be $1,000, right? So it gives you a quick and easy just amount to know how much is going to be allocated where, and then you kind of work within those parameters instead of I'm going to put $127.82 towards, this week's groceries, which is
Mm.
tedious. And if you don't have an app or something like that that can do it for you automatically, people will quit that in a few months.
Yeah.
So I do like the 50/30/20 budget. And again, you can modify those percentages to what makes sense for your cost of living expenses, but it's a good way to kind of have these broad categories. So that way you can just keep an eye on how you're spending your money.
Yeah, it's a nice simple way to just break it down, and I think hopefully everyone listening will be able to take that and start with it. And if people do want to just drill down a little bit into some of the other categories, is there a next stage of, if some people like to know a bit more information, where would they go from there?
Yeah, so one of my favorites is the zero-based budget, where you essentially budget every penny, right? And the objective is that every dollar has a job. And so you identify what are the things that I want to assign budget line items to, and I put them inside of the budget so that when I have finished allocating every dollar that has come in, there's no money left over. Right. And so included in that, of course, would be your savings, your minimum debt payment, and any extra debt payments you're making, rent or mortgage, all of the expenses that you have. And then you're also going to allocate how much you're going to spend on, entertainment and, you know, all the different things that you want to do. One of the reasons why I like this method of budgeting is because if you have specific goals that you want to accomplish, they can be line items in your budget. And now you can start to track how you're going to reach those goals. So, for example, many of the clients that I work with who are millennials are looking into home ownership. And so knowing that, a couple $100s every single month is going towards saving for that down payment, we can kind of estimate when they'll get to a place where they'll have enough in order to be prepared for purchasing that home. So I like the zero based budgeting, but I know that for many people, they don't want to be that detailed. They just want to know, okay, in general, how am I doing with tracking my finances? And for those of us who like every single penny to have a job, the zero based budget is a great way to go.
Yeah. Hopefully we've accounted for both ends of the spectrum there. And I think, I think either of those are good to try for people listening. And hopefully they will sort of, if they are looking for that, they can get on top of what they're
Yeah.
spending. Within your work, you use the term financial wellness. Can you explain to us a bit about what that means?
Yeah. So it's kind of like my blanket phrase for just this feeling of a level of financial peace, right? And it doesn't mean that you get everything right all the time, but it does mean that there's a level of financial security, you have a level of financial confidence, that you are not feeling stress or anxiety about your numbers, and you know where you stand. And so this idea of wellness, I believe it extends beyond just like our physical health and our mental health, but it also, our finances touch nearly every aspect of our lives. And so if
Mm.
we want to live well, we probably should have some level of financial wellness so that we don't have this feeling of financial stress, or when somebody talks about how much money they make or don't make, or bills that are becoming due. You kind of can like watch people's expressions change, and it's like, oh, I didn't mean to ruin your mood. But just this level of confidence that whatever needs to happen in your finances is going to work itself out because you have a plan in place, you understand your finances well, and you have enough reserves that if there is an emergency, you're going to be okay.
Mm. Yes, it's an interesting way. I suppose most people would think wellness, you think of physical health, mental health, like you said. And whilst it is that, those things can be affected by your finances,
Yeah.
right? So the food you eat, how much you choose to spend on food, healthy food or junk food, the mental health side of things, if you are struggling with your money, that definitely has a negative effect. So, yeah, I suppose to bring in that wellness to the finance side as well is totally understandable. So, let's talk a little bit about yourself and your journey to where you are now. So, what led you to sort of go into this field in the first place? Where did it start for you?
Yeah. So I come from financial insecurity. I grew up in a single parent household, and we did not talk about money. The only thing I knew was that I was asking for things, and the answer was often no. And it was accompanied by, we don't have money for that. Right. And so what it led me to start thinking about was, well, how can I learn about money? And what does life look like when the answer isn't always no? Right. And so I got excited about, learning how to make money, and then just the idea of building wealth. And so I dabbled into my first taste of entrepreneurship when I was either 12 or 13. I started braiding hair, and I was very good. Right. And so it was easy for me to make money, but I didn't have a concept of what it meant to save or what investments were. And so as quickly as I was making the money, I was buying just whatever because I had money and I could say yes to myself. And so after about, 4 or 5 years of that, I was getting ready for high school, college. And I was like, I need to figure out how to make money in a way where I'm not standing on my feet for so long. Like my hands don't hurt, my back doesn't hurt. Like I shouldn't be 17, 18 with this type of like back pain, right? I was making really good money, but I quickly realized like there has to be a way to make money where it doesn't hurt like
Mm.
this. And so I wanted to learn more about the financial markets and that kind of stuff. So I went to school for business. I have a master's degree in business administration and a concentration in economics. And so that's what kind of got me down the road of, you know, what's happening in the financial markets, how can I understand investing, and then be able to communicate it in a way to others that makes it simple.
Mm.
And I went to go work for a large corporation here in the United States, and I did not stay there long. I felt like a replaceable unit, and I really wanted to build something that was more personal, that allowed me to kind of go on the journey with people as they were learning to manage and grow their own finances. So I separated from that company and started my own independent firm. And so now, over these past 10 years, my agency has grown and we service lots of different clients in different aspects of their finances. And so for me, this journey started from a place of, not having financial wellness and wanting to
Mm.
know, like, well, what could that feel like? And then when I finally reached that point, it was like, oh, how can I teach other people to get to this place? And so
Mm.
over time, we started to ascribe like the accredited investor goals and the millionaire goals, largely because those are the numbers and the titles that people can kind of wrap their head around. Because when you say financial wellness, it's kind of abstract, right? But
Yeah.
if I
Yeah.
say, helping you become a millionaire, you kind of can say, oh, that's a goal that I can kind of identify with. And so, not everybody will become a millionaire, but lots of our clients are on the path to this wellness journey where, they may not need $1 million to be comfortable, but they're in a position where they're no longer feeling financial stress and they're not worried about, well, what's going to happen if I lose my job? Like, will I be okay for, 6 to 12 months while I try to figure out what happens next? So, that's kind of
Mm.
how we got here, just from I had a problem myself, and I was like, how do I fix this problem?
Mm. Yeah, you used the word entrepreneurship at the start to describe how you started at 12, 13. And I think that's a word that a lot of people are probably scared of. And
Mm.
they think it's about building this multi-million pound company or whatever. I'm an entrepreneur. But it can be something as simple as that and just starting to do something and earning money in return.
Mm-hmm.
And so it doesn't have to be this big, scary term. I think sometimes it's used as, or people have this perception of potentially. Or maybe that's just me. I don't know.
Yeah, no, I think that's across the board is we hear entrepreneurship and we think, you know, entrepreneurship is hard and it's challenging, and it can be, but at the core, every entrepreneur is just a problem solver. And so
Mm.
if you find a problem that you can solve and get paid for, you're an entrepreneur, right? It doesn't have to scale to where you have, lots of clients and lots of employees and all these interworkings to make it complicated. It doesn't have to be that. And that's the beauty of entrepreneurship is you literally can create whatever you
Yeah.
want and you are in control of it. So I love that part of entrepreneurship because it's really exciting because once you decide you don't want to do something anymore, you just stop doing it. Right? And that could look like an exit. It can look like, sunsetting a service. There's so many ways to just make this whatever you want it to be. And for me, all of that is in alignment with this idea of wellness because I get to create the type of business that I want based on the lifestyle I want to live.
Yeah. Yeah. You've got that control to do whatever you want to do in that moment, which is
Yeah.
the ultimate thing, really. And in terms of people listening who maybe are in that position that you were in, where they may not be financially literate, but they want to learn more, besides listening to this podcast, where can they go? Are there resources out there that they can look at to start learning a bit more about these things?
Yeah, so of course, I'm always going to say you can follow me on social media, right? I post quite a bit of educational content, but if you're looking for something that's more robust, I would go to some of the more tried and true platforms, right? So there is a platform called Investopedia that has lots of great financial resources. They have articles and video content. That's a great place to start if you kind of want to just figure out what's going on. And then in the US, there is something called the FDIC, Federal Deposit Insurance Corporation. I think that's what it stands for. But they have a free program called Money Smart, where it really walks you through just the basics of what does it mean to, you know, think about how the way your relationship is with money in regard to like financial psychology and like what is a budget, what is debt, what is credit, what are loans. And so it really gives you just this core understanding of the terminology and how all of these pieces relate together, so that when you come into spaces and you're talking with maybe a financial advisor or a financial planner, you don't walk into it and you feel intimidated. And I think sometimes for many of us, we may not go to an expert because we don't want to appear dumb or like, somebody's talking down to us, and there's shame and guilt connected with that. And so
Mm.
if you know that you want to change your situation, but you feel like you may need a little bit of education first, those are two places that I would go to start to get some free education. So that way you can become more knowledgeable about the language. And once you have a better understanding of the language of money, consuming content online becomes so much easier, because you can kind of identify like who actually knows what they're talking about
Yeah.
and who's just saying words that are, like trendy, and it doesn't make any sense, right? So I would say, start with more reputable, larger platforms, and then you can find financial influencers that are teaching great information, that maybe how they speak or how they teach really resonates with you. And so that's kind of how I would tell people to approach it, because there are lots of different ways to make money, right? And there's all kinds of people now who are on the internet teaching, but our background, our perspective towards wealth, what we think is enough, will shape how we teach. And so you want to find folks who you identify with, the style and like their message, so that way you can really absorb that content and kind of latch onto it and take some action.
Yeah. Yeah. I suppose this day and age on social media and like YouTube, you've got so many people out there giving advice, but getting that base understanding first before you
Mm-hmm.
go into that, to just understand what they're talking about and spot the people who maybe aren't as well versed as other people.
Mm-hmm.
So in terms of your drive to help, so this mission to help 1 million people become millionaires, where did that come from, and what keeps you driven to help people in that way?
Yeah, so this really stems back to my childhood. I grew up in a community where there was just like this core group of folks who was always volunteering, right? And they were, the volunteer coaches for the different athletics that I participated in. Like they were at the after school programs. And I always felt like this warmth of people who just seemed to care. But as I grew older, I noticed that a lot of them really didn't have a lot of money. And the conversations I was hearing, like that was the underlying theme, where they have a really big heart to serve, but they really don't have the resources to, take these programs to the next level. And so for me, this idea of helping people become millionaires and becoming accredited investors is because I know that when we give people access to more resources, all we do is expand their character, right? Money does not have character. It's not bad, right? And like if that's a thought you have about money, it's a misconception. Money does not make you a bad person, right? And so helping more people who just have this heart to serve and want to change the world, and improve like just their neighborhood, if we allow them to have the resources and the knowledge of how to grow their wealth, they are going to use that resource and pour it back into the community. And so
Mm.
that's what this mission is about for me. It's how do I teach more people, help them get their finances under the control, so then that way there is this spreading of more people just having this wellness where they're not, you know, crying alone at night because they're stressed about their finances. Where, if they really just had an extra $10 or $20,000, they have these big dreams of what they would do. And it's like, now you are equipped and you do have it. And so I think we could see so many more, great things happen if more people just knew how to manage money better.
Mm. And what's the process for making that sort of happen? So you get this person who sort of joins you and they want to get that understanding. They want to join you on that journey to 1 million, say. where do you start? What's the plan, the rough outline of it look like?
Yeah, so I love creating plans. Um, so typically what we do is we have a conversation that really identifies like what is this person's goal? Because of course, my goal is to help you become a millionaire, but that may not be your goal. So we really sit down and we talk about, okay, do you like this number? And if you do, here's how we accomplish it based on your income, based on your willingness to add more assets or add more income streams to your strategy, right? So we talk about timeline, we talk about, sacrifices, things that are non-negotiable. So like for some clients, they're like, hey, I am still going to travel every single year. So if part of this plan is going to require that I give that up, the answer is no. Right. And so we have that honest conversation because I would rather you tell me this is something I'm going to do. And then we figure out how to accommodate that. And that might mean it's going to take a few more years, which is fine. Right. Because you decided that this travel or whatever the non negotiable is more important than getting there faster. So,
Hmm.
that's part of that conversation. So step one would be we have a conversation. We talk about goals. We talk about the things that are most important to you. The next part of this is figuring out, okay, what assets do we have right now? How much income are you bringing in? Are there additional avenues that you would like to investigate? So every single quarter, what we do for clients is we introduce them to new ways to generating income, right? So that could look like becoming a landlord, right? Maybe you decide to purchase a single family, multifamily, hotel, whatever, right? It could look like buying a business. So maybe you purchase ownership in elder care or a child care center or a laundromat or whatever it is, right? And all of this is going to be predicated on whatever strategy we've put in place. And so, if you are somebody who's already said, I have no desire to be a landlord, then that's not going to be an avenue that we add to your strategy. But if you are somebody who said, yes, I want to have the portfolio, I need 600 doors, right? And so, that's where we identify what type of assets and income streams are you open to, and we build those into your strategy. From there, then we make sure you have all the accounts that are needed to reach your goal. So, do you have the retirement accounts in place? Are you in high yield savings accounts? Do you have the essential checking, saving? Do you have a, rewards credit card? One or two, not seven, right? Um, and then do we have our proper insurances? And so once all of that is in place, then we implement the strategy. Once the strategy is done, now it is just simply funding and working to get to completion as fast as comfortable for the client. So, oftentimes, what we see with clients is once the plan is done, there's a level of empowerment, excitement, because it's like, oh, I just need to put money into the machine and it'll kind of get me closer. Yes, that's exactly how this works. Right. So then
Yeah.
there's less confusion about what needs to happen. So if for some reason you happen to get a refund from paying taxes, oh my goodness, I have extra money. What do I do with it? Plug it into the machine, right? Because we already have a plan for this. Or maybe you get a
Mm.
bonus or a raise or whatever the case is, right? So just having that strategy makes financial decisions easier, right? You can kind of see how like the weight begins to lift because there's not a what am I supposed to do? It's like, hey, you got a plan. Follow the plan.
Mm. Yeah, and I suppose being meeting the individual needs, so finding out what that individual wants, and like you say, do they want to be a landlord? Do they want something else? That all comes down to that first initial meeting, right? So
Mm-hmm.
you've got to understand their mindset before you even
Mm-hmm.
look at anything else. So yeah, making it personal. Um, the words income plan I've seen you use as well. Is that the same as a budget? What's an income plan? Is that different?
It's different. So we talk about a savings plan all the time, right? Everybody's like, oh, I gotta save, gotta save, gotta save, which is great. But you also should be planning to make more money every
Okay.
single year, right? We know that inflation is real. The cost of living is constantly going up. The price of groceries seems like it's, doubling every year, right? And we have to do our part to make sure that we are being intentional about making more money every single year. Because if not, we might find ourselves at a place where you might get that 2, 3, 4, 5%, cost of living increase from your employer, but you on paper you're making more money, but in real life you're
Mm.
still in the same place. So you're not able to do as much with the discretionary income because it doesn't exist. So, an income plan is just an intentional strategy to identify what are the opportunities to generate more income. And so, for some people, that just looks like being intentional about going after raises and promotions, which is perfectly fine, right? Not everybody has to be an entrepreneur. Not everybody has to have this like side hustle thing. That does not have to be, your thing if you don't want it to be. But you absolutely should be identifying ways to make more money. And if that one revenue stream or income stream is your sole source of income, you absolutely should be figuring out how can I maximize this every single year.
Mm.
So that's what the income plan does. And for some other folks, it looks like, my primary job income, it looks like maybe I'm doing some side gig work with doing like some driving or deliveries, or maybe you have a small business or whatever that looks like, right? But every year, you should be making more money than the year before. And with our income plans, we try to put a percentage connected to that is above the cost of living projected increase, but also that will allow people to kind of stretch themselves a little bit.
Mm. Yeah. And something we've spoken about as well is obviously we spoke about budgeting. We spoke about how people can start to understand money and finances more. So when they first start learning. And I suppose another thing that people need to learn about is retirement. It's something we don't really think about. It's something that is down the line. I'll worry about that a bit later on because I'm 20. But really, I suppose the earlier you start, the better in terms of retirement. So um, there's obviously going to be differences between the UK and the US. I think here now you have to be enrolled by, or at least be offered by an employer into a retirement thing. But what should young people be thinking about in terms of retirement?
So, and it's hard being a younger person, right? Because, like, I don't know what full retirement age is there, but here it's not until 67. And I'm in my 30s. I am not working until 60 nothing. I'm not doing it. And so when I'm having conversation with folks who are in their 20s, 30s, even sometimes early 40s, my question to them is, what would you be doing if you didn't have to work? Right? And that is what retirement is. It is the option to not have to trade time for money. And so when we're talking about retirement planning, I like to tell people that retirement is not an age. It doesn't matter how old you are. If your bank account says you can stop working forever and you are 22, you can retire, right? And so um I want us to be, reconditioning what we think retirement is, because retirement does not mean old. Retirement just
Yeah.
means I have enough money to stop trading time for money, and I can do whatever I want to do, and it's optional. That's the other thing that I come across, is that some folks are like, "Well, I love what I do," and I'm like, "I love that for you. I love what I do too, but I'm not going to keep doing it forever." Right? There will come a day where I'm like, I am optional. I can stop this right now and I'm going to take that option. But for many of us,
Mm.
because we don't plan, that option gets delayed and delayed and delayed if it ever comes. So, what I would say for folks who are listening to this is retirement is not an age. It is what your assets and your bank accounts say you can do without trading time for money. And so your goal is however much money you need every month. So let's go back to our $5,000 example, right? If I have to work in order to get this $5,000 check, if I stop working, the money stops, right? But if I have assets that will pay me $5,000 and I don't have to do anything, I can retire. And so that can look like collecting the profit from the rents from a building I might own. That could look like collecting dividends from stock I might own. That could look like selling stock I have, right? So the capital gains from that. There's so many different ways to create income that is not predicated on your time, but you have to be intentional about setting that up, right? Because if I want that to look like capital gains, I have to start working on that now, right? Because there's not just going to be this day where all of a sudden, my stock portfolio has $500,000 in it and I can sell it, right? If you aren't like increasingly adding money to that, for most people, right? Somebody might win the lottery, and if that's you, hi friend, right? But um but for most of us, we have to be incremental with adding that over time. And the sooner I start, the smaller those increments could be. But if I wait until 55, putting $50 into my retirement account is not going to do much. But if I start that at 20, 25, even 30, right? $50 a month, that compounding interest over time, listen, retirement will be here before you know it, and it'll be nicely funded.
Yeah, I suppose it's that start earlier, and it
Yeah.
just builds up that compounding, exactly as you say. Um, and you mentioned in there as well about investing and stocks and stuff like that. So let's turn the conversation a bit towards investing.
Yeah.
What are the things that people should know about investing before getting started?
Yeah. So investing is only scary because you don't know what it is, right? All an investment is you take a sum of money and you put it inside of a vehicle with the expectation that that amount is going to return to you a larger amount, right? Technically, when you put money into a savings account and you get interest on it, you have invested, right? Nobody
Mm.
likes to say that because the return is like abysmal, but that is an investment because you put money somewhere, you made money on it, you got your principal and your interest back. That's an investment. Now, depending on the vehicle, the type of interest, the type of growth, the type of return, all of that is going to be dictated by the type of investment that you make, right? So, if we're going to talk explicitly about stocks and the stock market, you make money in the stock market when you invest in something that other people sees valuable. So it goes up in value. So for example, let's say who's being talked about a lot right now. Let's go with Apple, right? Um the folks love Apple, right? And so let's say I have $100 to invest in Apple, right? And a year from now, people still love Apple. Apple's doing well. And that $100 I invested is now worth $150. Well, you haven't quite made any money yet because you didn't sell it. But if you sell that $150 worth of Apple stock, you have made a $50 profit. That capital gain, right? Now, it could be subject to taxes and all that good stuff, but the investment was you putting money into something, expecting it to go up in value, and then you made money when you sold it, right? And that's essentially what you're doing when you're investing in the stock market. You're deciding that, oh, this particular company, other people appear to like it. It appears to be doing well. It's probably going to go up in value. That's what we hope, right? And if you leave it in that particular company over time, as long as you choose well, over time it's going to keep increasing and you just continue adding money and buying more shares, and that's how your portfolio starts to increase. So there has to be this fundamental understanding of what an investment is and what it's not, so
Yeah.
that way you can eliminate some of this fear. But that at the core of investing, that's what it is. You are purchasing ownership in a company. And if I was buying something, I wouldn't buy something that I didn't believe would make money, right? So, like,
Mm.
I wouldn't just go to a store and buy a shoe if the sole was ripped apart. Like, that's not a good investment. But if I go to the store and I buy this shoe and it's like there's only one more left because everybody else keeps buying it, it's probably something that's of quality. And so when you think about the investments that you're making, you're buying into companies. You want to buy into companies that you want to be a proud owner of that. That's what investing is in the stock market, at least.
Yeah. And percentage wise, maybe of like a salary, does that come from the 20%? Say we're going with the 50-30-20 to keep it simple. Would that amount that you're investing come out of the 20? Would it be a portion of that? How much should people be putting into sort of
Yeah, so
investing?
this is a really good question, right? Um, Now, I would like to say that it depends. That's always going to be my first answer. But um, we want to get to a place where we are investing upwards of 20% of our assets or of our income into investments. That is going to position us to be able to retire, right? Now, you might look at your budget and you might say, Tremaine, I don't have 20% to invest. And so the answer for you is going to be as much as you can invest without having to take the money out again. So that could look like starting with 3 or 5 or 8 or 10% or whatever that number is for you. But whatever amount you put in, it needs to be money you can leave there because you don't want to risk taking it out of the investment prematurely and losing money because you pulled out at the wrong time. So The short answer is the more your budget will allow you to invest that doesn't compromise your quality of life, right? Because for some of us, we have low living expenses and you probably could put in 50% of your income, right? Which is great. You could probably retire fast. But if that's going to leave you to rice and beans for breakfast, lunch, and dinner, that may not be a quality of life that you want to experience. So all of this goes back to that first conversation of what are your goals? And if your
Yeah.
goal is to retire faster, then you're probably going to have to sacrifice and invest a higher percentage of your income sooner. So the short answer is as much as you can comfortably invest. The longer answer is we want to, get that amount up over 20% as soon as possible. So start where you
Okay.
can. If it's 1%, start there, but you want to get that percentage up as high as
Yeah.
possible.
Yeah. I suppose it always comes back to that individualization
Yeah.
and looking at the person, and everyone's unique, everyone's different. So just adjusting to yourself, really. And with those investments, should it be regular, smaller investments? Should you be putting larger sums in over time? What's the best method there?
Yeah, so another great question, right? In general, we like to teach dollar cost averaging, which is putting in small, repeated contributions, maybe every single month or every single pay period. And so, what this does is it allows you to not try to time the market, right? Because sometimes we'll say, oh, stocks are down. Now's the time to buy. But nobody can predict when you're going to be at the bottom of the stock market. And so instead of trying to predict and being wrong 90% of the time, just have a consistent cadence where every pay period I'm putting in, one, two, whatever the percentage is, every pay period I'm going to invest inside of this portfolio and have a consistent routine. The name of the game is nice, boring, and consistent, right? Investing can have this false perception that people are only successful if they are day trading or if they're doing options trading or if they're doing some of the advanced complicated strategies. But most of the successful people who have built wealth in the stock market have done it over time with dollar cost averaging, which is just whatever dollar amount that you're going to put in. You don't try to, figure out if you should wait until the next day or not. The amount is the amount, and over time you're going to win. So that would be my primary recommendation, is to dollar cost average your way into investing. And then when you get some of those periods where you might have a lump sum, again, you got to go back to whatever those goals are. And that's going to help you dictate, like, oh, should, a portion of this go into my portfolio? And the answer will probably be yes, based on your goals, right? But what I will say is at the top of the year, sometimes people like to max out their tax advantage accounts, right? And so if you have the cash available to do it at the top of the year, you might find that you will experience better gains because, you have more money in the market longer than if you were to kind of spread that out throughout the year. So if the cash is available, doing it all at the beginning of the year is great. But if it's not the end of the world, right? So you can still spread that amount out over time as it becomes available to you from your income.
Yeah. Awesome. That's lot of information in there. And just sort of bringing it in to a close then. One of the things that I started to do at the end of episodes now is ask my guests to leave a question for the listener. So this is from when I used to listen to podcasts and used to go away and listen, have these conversations around what I'd listened to with people around me. So if you could give a question to the listener now, something they can take away to a friend, a family member, whoever it is, and start a conversation, what would that question be?
Oh, this is good. So my question would be, if your primary source of income stopped tomorrow, what would you do?
It's a good question. I think a lot of people never think about that.
Mm-hmm.
And I think if they do sit down and sort of have a moment to think, it will probably be quite scary.
Mm-hmm.
Tremaine, it's been amazing. I think there's so much information we've managed to pack into the last 50 minutes, and I've really enjoyed it. So thank you so much for coming on. If people want to find you online and follow what you're doing, where can they do that?
Yeah, so my social media handle is at Tremaine Wills. I am like Visa. I'm everywhere you want to be, including TikTok.
I'll put the links and stuff below so everyone can go down and just click on the links as well. But it's nice and straightforward. It's an easy one. If anyone listening enjoyed the episode and found value from it as much as I have, then please do share it with a friend, a family member, or anyone who you think may enjoy it and find value from it. If you don't already, then please do follow and rate the show, as it helps us reach new people. And you can also follow on Instagram at Lonely Chapter Podcast. And lastly, from me, thank you for listening.